Hi, Rob here from Business Buddy Chartered Accountants. This morning I want to talk to you a little bit about the different legal structures you can use for running your business in. Tax is obviously a major cost of running any business, and if you get your legal structure wrong, it could have serious consequences for your business. In Ireland there's two main structures that are used. One is a sole trader and the other one is a limited company. Both have their advantages and disadvantages, and both can be used depending on the circumstances of your own business and your own personal circumstances. So it's important to get it right and take good advice. I'll talk about sole trader first. Sole trader is the simplest structure to use. You can register online with the revenue and you can get up and running within about 10 days. There's no cost. However, there's no distinction between you and your business if you're a sole trader. Any profits you make are going to be subject to income tax. And the good news is, and the bad news is, if you make a loss, you can use that loss against any other income you might have, or you can use that loss against your spouse's income in the year it happens. Some of the disadvantages of a sole trader is your personal assets are at risk if your business fails. So if you're taking on debt or taking on loans or taking on staff or leases, maybe you should think about using a limited company structure. But for most startups and most one-man bands, a sole trader is the best way forward. When a client comes to me and says, I'm a sole trader, but things are going really, really well for me and I'm thinking of expanding, I want to take on staff, I'm thinking of moving to a business premises, taking on a lease, and I'm talking to a bank and they're going to give me an overdraft or a loan. I just say, okay, you need to stop and think about converting your business from a sole trader into a limited company. The primary benefit of a limited company, it's in the name, it's limited, and your liability is limited when you operate through a limited company. So in the awful event that things go poor for your business and you have to wind it up, the only assets that a creditor can attack are the assets of the company. So your private home is safe, your savings are safe, your personal assets are safe in most circumstances. So if you're in that position of wanting to expand, take on staff, take on debt, take on a lease, I would encourage you to consider using a limited company as the vehicle for your business. Now, a limited company is dearer than a sole trader. You have to get a company, but it's not that dear. It's about 500 euros. You could have a limited company. The annual accounting costs for a limited company are dearer than a sole trader. But this is the price you got to pay for limited liability. You also have a lower tax rate in the company, this 12.5% tax rate, which the EU wants to take off us, but we're going to hold on to it. You'll benefit from that 12.5% rate if you have a limited company. Plus, your pension planning options are much more flexible in a company. So, for a business that is more complex than a sole trader, has debt involved in it, I would definitely recommend forming a limited company. But everyone's circumstances are different and it's not a one size fits all. So to get you on the right track from the very start of your business, all through its lifespan, come and talk to us at Business Buddy and we'll make sure that the structure that you're using is the most tax efficient structure for you and is also the model that best fits your personal circumstances.